Well, hello everyone and welcome. I'm Kathy. I'm the organizer of today's webinar here at Rosenfield and Company, and I'm super excited you're all joining us. We've got a really insightful session ahead. We're diving into parts reconciliation and why it's so important for dealers to get it right, which apparently it's a hot topic because we have a full house today. We are super thrilled to have Mark Payne from Total Dealer Solutions with us. He'll be sharing some real world insight, maybe a few cautionary tales. And we'll also hear from Ken Rosenfield, our founder and partner, who is actually joining us all the way from Switzerland. So Ken will be sharing his accounting point of view. And of course, the conversation will be led by our fantastic moderator, Alicia Webb. And just a quick reminder, we would love for you to be part of today's conversation. The Q&A chat feature is open. I'll be keeping an eye out for all your thoughts and questions throughout the session. And with that, I'll hand it over to Alicia to kick things off.
Thanks, Kathy. Hi, everyone. Big crowd today. Pretty exciting. And I know you all have great questions. If you don't, I'll have to ask questions. And I can always do that, but I want you all to ask them. I've already learned stuff just talking with Mark before the session started. So I know y'all are going to learn things too. And without further ado, I'm going to pass it over to Mark.
All right. Thank you, Alicia, and Kathy. And first of all, I just want to thank you all for joining today. My name's Mark Payne. I own Total Dealer Solutions, started it in 2003. We do parts physical inventories for dealerships and all over the country. And so this is a topic that typically we run into with dealers. Just to give you a little background, I've been doing this for many years. I've got about 30 years in the parts experience, and we've seen all the best dealerships, the worst, and everything in between. What I'd like to do is go ahead and get into. We move to the slide for the reconciliation sample. And we'll just dive right into this. So this is typically what you're looking at. And I know that it's very small, so most of you probably can't read it unless you have really good eyes. But you can always request, and we'll send a sample of this. We're actually going to zoom in a minute. But this is, when we do a physical inventory, this is the report that everybody looks at and is kind of the real the meat of what we provide. So when you look at this from without zooming in, you see a total column, and then off to the right is each GL broken out individually. And so the important part is that when you're doing a reconciliation, that the everything is each GL is broken out individually, and that's done properly. Otherwise, you're going to have a lot of overlapping from accounts and things of that nature. So you definitely want to have it detailed out by general ledger. We'll typically go down, and what I'm going to do right now is just kind of run down through what this looks like and how we would present this. And this is kind of a guide of, this is the same thing that you would do, or same formula if you were doing a monthly reconciliation. So what you're going to want to do is basically starting on line 1 of this report. This is where we bring all of the pad values, the work in process, all the reconciling items, and then compare it to the GL. So starting on line 1 would be your parts and accessories from your pad value. So depending on what DMS you're looking at, that's where you pull that value from. And certainly, we don't have enough time to kind of go into every DMS, especially now that there's a lot more DMSs on the market that dealers are using. But we know all of them, and we know exactly the reports where to get that data. And it's important too that you're getting the right data from the right report. So but at any rate, we start off with our pad value. We include our new core values in there. Line 3 would be any parts that you had on hand, but not in the system pad. In this particular case, they had a large amount of parts that was not in the pad, and that's typically not something you're going to have a large amount of, but in this particular case, and this is an exact example, and you'll see why I use this one later. But you then have your used cores on hand, your parts sold during inventory not counted would be included in there. So your total stock is that value, and that's your pad value. And for those of you that don't understand what pad value is basically it is on the parts side. It's the what the parts, how the parts control. So it's the part number, and it really was stemmed from exactly that, a parts pad, which would be a listing of all of your parts by part number, where you keep them, the location, how many you have on hand, the cost per unit, the core cost per unit, and the extended value of that part. And that would be your pad value. And so whatever that is, and that can move independently of your GL, and it does. So so that's why we're saying pad value. That's what we're talking about. Then you have your work in process, and you want to take that into account. So if you have body shop work in process, you'd have that in there. Your service work in process. If you have open counter tickets, which typically you do not want to have open counter tickets, because the minute the part leaves the department, that counter ticket should be closed and billed out. But there are cases that does happen, so we have to account for it. And then sometimes closed ROs that haven't been posted to accounting yet. If you're not on real-time posting, then you would want those as well. So but most dealers are on real-time posting at this point, rather than nightly batches. Next is your claims and returns, which would be parts returned to where you purchased them from, but the credit has not been posted to accounting yet. So it came out of your pad, but it did not come out of your GL yet. So then you would have your shortage damage claims that have not been posted to accounting. Any used cores that you've returned that have not been posted to accounting, so you didn't get the credit to post yet, but you've sent them back. So you don't have them there physically to count, so you want to make sure that you have those as well. Inventory grand total is all of those sections combined. And then you go down to your next section C, which is your outstanding invoices. So parts received into the pad, but not posted to accounting. Parts posted to accounting, but have not been received. And then prepaid special orders that have not yet arrived. And so those would be your total amounts not booked to the GL yet. So the next section is where we bring it all together and compare that to the general ledger. So on line 1 there would be your combined general ledger balances as of your cutoff date for your reconciliation. So let's say that you decided you wanted to do this on the month end, you would pick the day. And again, your monthly reconciliation does not have to happen on the last day of the month. It can happen anytime. And quite honestly, I would recommend that you're doing it, maybe the end of the first week or the beginning of the second week of the month, because you've probably reconciled your part statement at that point, and that's when you're going to have the least issues that you may find where invoices weren't turned into accounting, things like that. So whatever that cutoff is that you decide, you want to make sure that that business is done for the day. So you would pull your GL value. If you're on real-time posting, you can pull it at the end of business after everything, all the movements closed and the parts is closed, service is closed, and you would pull your GL values. If you're not on real-time posting, then you have to either force your end of day to get your proper GLs, or wait until the next morning and pull your GLs and plug them in before anything gets posted to the GL in the office that next day. That way you've got your updated GLs. So that's important. Then you take your amount not booked to the GL, you add that in, subtract out your work in process, subtract out your claims and returns to give you an adjusted GL. which then the next thing you have to look at is your appreciation depreciation. And that's a big thing right now, especially with tariffs. A lot of price changes going on. That there always is price changes, but they're even more so now, especially can be large, and you want to make sure you're capturing all of that. So so you want to make sure that any appreciation or depreciation that you have not posted to accounting gets included. And how you handle appreciation, depreciation, we'll talk about that later, because there's a couple different ways that you can handle that, and you need to make sure you account for it. We recommend that you book your appreciation, depreciation every single month. Now, whether you book that to a reserve account and take it in your 13th month statement, or you book it every month, that's between you and Ken. And but you do want to get it out of your parts GL every month, so that your parts GL is most in sync with the pad as well. So at any rate, if you have your appreciation depreciation, you want to adjust your GL. So let's say in this particular case there was 18,000 that had not been booked to the GL yet. You'd want to adjust your GL to bring that to the 719, and then you would take that and put that against your physical inventory value from the top, and that gives you your overage or shortage. So in this particular case, we have a couple different postings here, and the reason being is it depends on if you don't book your appreciation depreciation separately, and you just do an adjustment every time you do your inventory, then the 11C would be your adjustment. It's the 144,000 in this case. If you're booking it separately, you would book 11A, which would be your 163,000, would be your adjustment to inventory, and then you would book appreciation of 18,840. So again, we always get a lot of questions on that. So and then you also have the scenario where people don't book it, but they want to start booking it every month. Well, you can book all the previous months if you want, but the current month you definitely want to you don't want to necessarily book that, because you'll book that at the end of the month. So anyway, I know that gets a little confusing, but it's really important that that's handled properly. So that's your scenario. Now, we're talking about a lot of things, a lot of the issues, and we can go on to the next slide and talk about the biggest thing is that we run into and common challenges, but the number one thing that I'll kind of point out, since we were just looking at this reconciliation, is the lack of understanding and knowledge of what this process actually is and how it's affected. And when I say that, go on to the next slide, and I'll show you we have this same sample that we just went over. Now, hopefully most of you are saying, oh my gosh, 163,000 shortage. Or saying, oh my gosh, that's an incredible shortage on 555,000 in inventory. So, I mean, it's an incredible shortage no matter how much you have in inventory. But in this scenario, it's huge. And so in this particular case, and we've taken out the names to protect the guilty, and so if you flip to the next page, you'll see the response that we received from the general manager when we had this $163,000 shortage. His response was, teams, let's get this whip down and get these ROs closed out. So right away, that told me that this general manager didn't really fully understand this report or what the shortage meant. And, because I'm pretty certain that most people, if they realize that it's $163,000 that's about to come out of your profit and is going to get knocked off your bottom line, I think that would have been a different response. And quite frankly, if it was my dealership, I'd have been like, okay, we're going down to the parts department and we're going to lock the doors and we're going to figure out what's going on here. And um, because there is a large shortage. Now, the question is, did this happen in the parts department or did this happen in accounting? Most people, the next reaction if they see $163,000 shortage, the first thing that's going to happen is, oh, this parts manager needs to get fired. And the reality is that's not the case. Because there's so many areas that this can happen and not be, this can happen in accounting, this could happen in parts, either one of them. So I caution people also not to be too quick to jump and say, oh, $163,000 shortage, we've got a problem with the parts manager, because it could be, multiple places. So, and as we go on to talk about the common challenges that you find, which is the next slide, is again the one that we just talked about, which is the lack of understanding and knowledge, and really the issue here is that parts doesn't know a whole lot about accounting, and accounting doesn't know a whole lot about parts. So it's always the constant finger pointing. And, parts will say, oh, you know what? I don't know what goes on in that accounting department. They're so screwed up. They have so much turnover, on and on and on. I know my parts are perfect and I've got no issues. And then I've got, on the other side, you've got the accounting department saying, I don't know what the hell goes on down in that parts department. They've got a mess down there. I know my books are perfect. We don't make any mistakes up here. And so it's this constant impasse, and nobody really, it's just you end up with this finger pointing. And the reality is that we've been able to identify that it's both. And how we did that is we with so many dealers having this problem, we built a program, Parts Rec, that does daily reconciliation, parts to accounting. And through that process, what we have found with dealers is it's thousands of small issues that come up, and they're process issues in parts, and they're accounting mistakes in accounting, and it's both. So no one really is off the hook on this in either department. We end up with, and the problem is you can't see it. So if you can't see it, you can't fix it. And that's what we run into. And that's where a lot of the problems, is just that constant back and forth and not understanding how accounting necessarily moves by parts and vice versa. So there's that issue. The other one of the big challenges that we do run into is the cutoff time. So it's important that, as I had talked about earlier, that you pick that time and that everybody understands that's providing their data has to make sure that like the parts manager has to know, okay, end of business today, we are going to make that our cutoff for the reconciliation. So they have to make sure everything that they've received into the pad, that they have all the packing slips. If they haven't been turned into accounting, they're using that as a reconciling item. All those things that are on that report that we went over, that they have that up to that cutoff time. And then again, the inventory reports need to be run. A lot of times we'll look at people's data or their reconciliation, and they've pulled a month end report. Well, the month end report is not going to do you any good because that's as of the 30th. And so you can't necessarily pull that report and then also say, oh, we're just going to pull that later. We'll have our month end number and then we'll pull the GL as of the end of the month, because the problem you have there is if you're backdating stuff into your GL, that's going to go, and you do it on like the 3rd, 4th, 5th of the next month, that's not going to be the same. So you're going to be off. So you have to be making sure that everything that you're accounting for is as everybody's on that same cutoff time. If and again, with all these different DMSs, and a lot of stores are moving to a different DMS, making changes, a lot of people are unfamiliar with those reports, and a lot of time when we're in doing an inventory, we're we're helping, dealers find reports, if they were on CDK at one point, now they're on Techion or another set or dealer track or whatever system they move to. We're kind of helping them. We're doing a little translation with them saying, okay, if you're you know your management report in CDK was this, and over in dealer track it's this, or over in Techion it's this. So we kind of help them find those reports, and a lot of times there's just not a clear understanding of that, and so it's really important that if you did go through a conversion, that you're understanding, take all the reports that you used to look at in your old system and make sure that you know where that report is, because they are in there. Those reports are in there. You just have to find them and get them. So but then again, making sure that they're correct and they tie out, that's another scenario. So then the next challenge that we see is that all of the accounting or the reconciling items are not accounted for. So maybe the parts manager's doesn't have all the reconciling items. They don't keep a good track of that. So maybe there were parts that were received in, but that they forgot about, and they didn't post that invoice to accounting, or it got lost or something of that nature and never made it to accounting. So it's really important that you've accounted for all of those moving pieces, if you will. Also, if you do a return, that you've accounted for that. You send back a bunch of used cores. Did you get that credit and posted to accounting yet? If you didn't, you do need to keep that. You need to get that in as a reconciling item. So it's really important that you do that. Another thing that we run into is, if you sell parts, obsolete parts, if you sell them at a discount and you're not accounting for that correctly, you need to make sure that you've turned into, if you sell them, let's say you sell them for 50 cents on the dollar, if you don't if you just minus them out and you turn in your what you sold them for. So if you sold $10,000 worth of parts, and you minus those all out from your pad, and then you turn and then you turn into accounting, and you say, hey, we sold these parts for $10,000. I minused them out. You don't bill them out on an invoice or anything. You say, here, I sold these for $5,000, and all of a sudden they relieve the GL by $5,000. You're going to be $5,000 short next time you reconcile. So that's a common area that we see things like that. So you want to make sure you're accounting for those things properly, whether it's a reconciling item and that you're accounting for the full 10,000, not just the 5,000, because your 5,000 would go to discounts and adjustments, the offset, or obsolescence reserve, however you account for that. But that's a big one. So again, all the reconciling items, got to make sure you have them.
Mark, can I interject just one real quick?
Yeah,
Because you
absolutely.
put on so many amazing points, and as we see in our practice, most of the problems that ever occur is a failure to communicate between the accounting department and the parts department. I mean, you've hit it right on the head. And what we recommend a lot, and I'd like to get your thoughts on this, is have the accounting department learn the various reports that the parts department issues and be involved in regular, consistent meetings with the parts department going over these reports. So something like that would happen when you sell an obsolete parts for $5,000. I mean, that's going to be a communication issue, and they have to have a good communication between the parts man. What do you think kind of communication they should have?
Yeah, definitely. I mean, that's one of the, and just to kind of touch back on when we bring a client on our daily reconciliation program, there is so much time spent in teaching, because we're really teaching a parts person accounting, and vice versa. We're teaching that accounting person parts and how they move through the system. So they're learning a lot, and it's really an eye-opening, and it makes life so much easier when when they both can kind of understand each other's world. They don't have to be experts at it, but just understand it, understand where the numbers come, how it's great for accounting to understand how the inventory pad can move independently of accounting through like plus minus adjustments or things of that nature, how the depreciation works, which I'll talk about that. That's a big one. That's always a big the depreciation and how that works is always a big question mark. So absolutely, it's really and everybody needs to be, everybody tends to guard their department like they don't want anyone to know anything about it. And everybody needs to get the hell over that, because you're both on the same team, you're both for the same mission, and if you can help each other a bit and not be so guarded, it's amazing what can happen. And try to help each other understand each other's department. And your life will be much easier. I promise you that. I've seen it. I've seen stores that have that relationship, and it's powerful. And they work through all their issues, and they don't talk down to each other. If someone in accounting is talking to a parts manager or parts person, and a parts person asks a question, and they say, they have this attitude like, you don't know that? Oh my gosh. Well, the same thing can go the other way. That's not their, what comes easy and natural to you doesn't necessarily come natural and easy to the other person. That's why you're in these different departments. So the idea is be patient with each other, work together, and work to understand each other's departments, and it'll be much easier. So yes, absolutely, good point. The going on to the next slide, some of the other challenges that we talk about is variances. So there's two types of variances. Like when we're doing a physical inventory, there's a variance of the pad to pad, which that's, the system said you had 5, we counted 4. That's your variance that we have at the time of doing the physical inventory. So a lot of times people get this variance thing confused. What is the variance? Is it the pad, or is it the variance to accounting? And what really comes down to it at the end is everyone's really looking at the variance to accounting, and that's kind of what we're talking about now, because that's the reconciliation. Albeit the variance to the pad is extremely important in your day-to-day operations. Because if there's a lot of variances on the pad, then that means your on-hand quantities are wrong, which is going to affect your revenue. And I can go on and on about that, but that's a whole nother story. So, but when we're talking to accounting, the variance to accounting, I can't tell you over all these years how many stores that it's just such a common problem. It doesn't line up. And part of the problem is because you're dealing with batch accounting versus transactional accounting. You receive 100 line items in on an order, you get an invoice for it, you post that one invoice to accounting, not every single line as it gets received into the system. So that becomes a problem, because maybe the quantity didn't get proper quantity did not get received in. Maybe they received 1 instead of a pack of 10. So on the pad, that's wrong, and now you're off to accounting. So a lot of there's just so many difficulties in trying to nail down the variance to accounting, and over the years there was no explanation for it, and so and people really said, oh well, we're under 3%. As long as we have 3% or less, we're good, and that's acceptable. And for me, if I had $1 million in inventory and $30,000 went unaccounted for, I don't think I would be okay with that, and I don't know why that's acceptable. Well, I do know why. It's just because that's just the norm, and people say, well, industry standard is 3%, so I guess we're good with that. It should be 0. Unfortunately, that never happens because of all the nuances of all the things that can happen. So and some of the causes, as we go on to the next page, some of the common causes that we find are you know, again, I mentioned it earlier, the pad can move independently of accounting. So plus minus adjustments is a huge issue. If you have that open to numerous people in your parts department other than the parts manager, and they can go in and plus minus adjust the counter pad as they see fit, that can be a problem. Especially if you're not, if you do have people on it, but you're not looking at what those plus minus adjustments are, and having a report that you look at to monitor those to make sure there's nothing going on. But you know, that leaves you wide open, because that, when you do those plus minus adjustments, nothing carries over to accounting, to the GL. So and why are you doing them? You know, in some cases it would require, you know, if it's just, if the part's not there because you can't find it and it was there, which means that it was either stolen or misplaced, or maybe a technician came into the parts department, which you absolutely never want your technicians to have access to your parts department, not because they're stealing, but because they'll come in the parts department, because you'll be on the counter people will be on the phone. They'll come in and on their way out, grab a part, and on their way out, yell, "Oh, put it on RO, 1, 2, 3, 4," and no one hears it. The part goes away, goes on the car. Now you haven't billed it. So there's a reason for that. You want to keep the techs out of there. But let's say that that's the scenario. Now you're doing a minus adjustment on that part because the system says you have it, but you don't have it on the shelf. You're doing a cycle count, and you look at it and, oh, it's not there. Okay, let's minus it out. Well, where's it's still sitting in your GL. You minus it off your pad, but it's still sitting in your GL. So wouldn't that be nice to be able to track that on your GL and say, oh, we have shrinkage, and here this goes to a shrinkage account or something like that you're able to track it and keep a tally of it, and really see the effect of your issue. Um, so
Mark,
plus
we
minus adjustments.
actually,
Yeah, go ahead.
sorry, we've got a question of what are some examples of reasonable plus minus adjustments?
Reasonable. So reasonable would be, hey, I went to pull this part, it was damaged, and we need to write it off. So you would minus it, and I would have an adjustment slip that they turn into accounting, that they can turn that into accounting, say, hey, we minus this off. Some stores will bill that out to a ticket, internal ticket. That's another way to do it. There's a couple different ways. Rather than doing a minus adjustment, they would bill it out. That way it does take it out of the GL as well in that case. Or you're doing the minus adjustment and you just turn in a memo to accounting of adjustments to make. The plus minus adjustments that I mean, it's not very often that you should, if you're having a lot of plus minus adjustments, that means that they're either billing out a part wrong because it's only off by one number, and like it's a left or a right, and so it's only off by one number. When they go put it on an RO, they hit the one and it goes to the RO. It's the same cost part, it's just one's a left, one's a right. They bill out the wrong one, and now they have the wrong one, and they have zero of one that's on the shelf actually, and one of one that's not on the shelf. So those can take place. But usually if you're doing plus minus adjustments, it's because you've had a breakdown in your process of something went wrong, and that's 90% of it. There's very seldom do you want to be doing that.
We have one more question.
Okay.
Would we have plus minus difference if we are running job stack at end of month for parts and taking GL for end of month date after all bills posted for factory statement?
No, because your GL is going to include parts that so you're a lot of times people, so let's say that you get an invoice dated the 30th, but you don't receive the parts until the 1st or the 2nd. You don't receive them into the pad. So those parts are not going to be showing in your parts pad. You would have to take that invoice and say, okay, this was an invoice that was posted to accounting, but we hadn't received the parts yet. And then you get into the issue, maybe some of those parts were received because you were invoiced for them on the 30th. Some of them you did get on the 30th. The others you didn't get on the 1st. So it gets very hairy there. And so it becomes a hard one to really, tie out to. So you're just best off saying, we know today, this is at the end of today, this is what's been posted to the GL because we're using today's GL. We're not worrying about all the other stuff. It's just you're less likely to have errors and mistakes, and it makes it easier to do. And quite honestly, at the end of the month, don't we all have too much to do anyway? So why not push this off a week so you can do it when you have time and do it right? So that's my opinion. The next common cause that's usually a big one is in-outs on repair orders. So let's say you have a car in your a used car in your service department and it's not your make, so you have to buy some parts for it. So you don't add those parts into your pad, so to speak. You don't add those part numbers into your system because you're probably only going to buy them once and not frequently. So rather than doing that, a lot of stores use the in-out process on the repair orders, which means they put the part right to the repair order and they put the cost in, and it goes right on there, so it bypasses the pad. So you have no record of receiving that part. You have no record of anything other than it's just on the repair order. So what you do is you write a purchase order for it, and now the PO is written for it, and the parts manager gets the invoice, looks at the PO, approves the PO, and off it goes. Well, the way the system is you have to check every RO. When you're approving a PO, you should be checking every one of those and look up the RO to make sure that who put that RO or put that line item on that RO put the correct cost on there, because there's no tie out to that. And what happens is, let's say that your service advisor put a part on there and it was $100, and they actually fat fingered it, or let's say it's $1,000 and they fat fingered it or they only put $100 in there. Your GL is going to be reduced by $1,000 when it should only be reduced by $100. So and that could go vice versa either way. So they could potentially, because they're putting in the cost directly on the repair order, and that's what's coming off of it, not necessarily so there's a lot of vulnerability just in that function right there. And nobody ever knows about it. So it can go undetected. And unless they're checking every single purchase order as they approve it. And even then, after they've checked it and approved it, if the RO is still open, somebody can go in and take that off of the RO. And now what? It doesn't go back into your pad. Where did that part go? You want it to be returned, right, to where it came from. So there's no tracking whatsoever for that. So that's a huge area of vulnerability, and an area, for people who are dishonest in the store. That's a huge area of opportunity, and a way to, we had a scenario where a guy was buying tires for a sports car, Pirelli tires, and put them onto a repair order as an in-out, and then took them off of the repair order, and then the parts manager approved the PO, and then took them off afterwards, and lo and behold, who knows where they were, but we were able to find that, and it was actually with the help of our program, and that, and boom, otherwise they would have never found that. Those would have been gone, and nobody would have known. So
another item to add.
Yeah.
Another item to add is make sure the part and the opcode match too, and just as an extra level of internal controls as well, because sometimes
Sure,
they're
good point.
putting faulty tires in a car that wouldn't even want them,
Exactly.
something like
Yep.
that. So that's just another add on there. Go ahead. That was
Yep.
good stuff.
Yep. Absolutely. No, good stuff. Um, So the next common cause we'll talk about is appreciation depreciation not being recorded properly, and that's and that is especially with tariffs and price changes looming out there, that can be huge. So just to give you a quick rundown, I mean basically appreciation depreciation happens when the manufacturer price tape gets loaded into the system and and they have a change on the price, and whatever quantity you have on hand at that time times by the amount of the change, that's your appreciation or depreciation. You should be getting a full report of that um, every and what you want to do is get that done every single month. At the end of the month, pull all of your appreciation depreciation, make sure that it's accurate, and have a detailed listing of it. And then, and once you've identified that that's accurate, because you could have a scenario where, the moon and the stars lined up and you accidentally had 100 of one part in when you really only had 10 of them, and there happened to be a price change on it, and so it overinflated your appreciation. So you want to always be checking that. You're to and validating that, and the good policy is that your parts manager looks at runs the appreciation depreciation report at the end of the month, and checks it all and signs off on it. There's also scenarios where a part, a number of years ago, Honda had their airbag issue, and some dealers made a hell of a lot of money off those airbags because all of a sudden, um, the dealers weren't getting them put on, and so Honda was trying to incentivize dealers to put them on, get those airbags done, and so they had them in stock, and so the ones that had them in stock, all of a sudden they had I had one dealer that had $240,000 of appreciation just on the airbags that they had in stock because of the price increase, which was all valid. It was a win. So it's important that you're looking at all of that, especially with tariffs looming out there and potential lots of price changes, and especially to large dollar amounts. So and once the parts manager signs off on that, you want to record that, and again record it um, to a reserve account, or you can take it in that month. That's between you and your CPA. So how that needs to be handled, but it should be taken out of the parts GLs so that those stay aligned as best as possible. Um, the the next thing is special orders not being filled. So you've got you may show an on-hand quantity of a part that you actually handed out, but you didn't fill it in the system, so now it's showing as an on-hand quantity, so your pad value is going to be inflated, and that can cause problems because the part's been sold, the GL's been relieved, and it's gone, but because of the way that the DMS looks at it, you didn't fill it, so therefore it's showing it as on hand. So you want to make sure that you fully understand how your special order process works within your DMS, because it's different across all of them. They all have their own creative, wonderful ideas of how to deal with special orders, and unfortunately, there's only one or two that actually do it that makes sense. But that's something you want to definitely work at. The next issue that we go to is we talk about DMS bugs. There are bugs in these systems where you can't account. And just to give you an example, your inventory, let's take CDK for instance, since a lot of people are on CDK and understand it, or have been at one point and understand it. So if you look at your PH7 report, your value by source at the beginning of the day, and it's $623,929. And at the end of the day, after business is closed, your pad value off that report shows, $25,000 less. All right. So you can't, there's nowhere in the system that you can go and get an accounting of all of the transactions that make up that difference. And that's a problem. That to me is a bug. And part of it is just the way that, like in-outs can work. Other things can happen. You could have a part on an RO, and a price increase, your appreciation depreciation runs, and it happens to be a price change on that part. And then all of a sudden you decide, 2 days later, oh, that part, we're going to take it off of the RO because we don't need it. That goes back into your inventory. Well, that part nowhere did it record appreciation depreciation for that part that was on the RO. So those are issues. Just lots of little areas that can happen. And things get missed and slide through the cracks. So those are things that that you're looking at. So I can go on and on with a number of different causes and so forth, but at the end of the day, going on to the next slide, the issue is there's no accountability. And if you do not, if you don't have accountability, that equals high vulnerability. And when I say vulnerability, I don't mean to put it out there that, oh, there's all these people that are that you can't trust that work for you. It's not about trusting, it's about knowing. And if you have, your parts inventory is your cash. That is cash. Nobody has that financed. So that is cash in your dealership. And the accountability of that cash is very loose. I mean, and you have to really get the mindset of whether you're a parts manager or an owner or a controller. That's cash. If I'm a parts manager and I'm stepping into a dealership, taking over that department, if you took over if the dealer handed you, $600,000, which is, roughly the average out there of cash, would you just take it and say, okay, I'll take care of this for you? Or would you say, well, hold on, I want to count it and make sure it's all here, and then I'll be responsible for it? Well, that's the same scenario here. And once you do take responsibility for that cash, then that's exactly how it should be looked at. How a lot of times, dealerships do their physical inventory and we do the reconciliation and they're over. Everyone's high-fiving at that point, and I'm sorry, but that's not right. High-fiving because you had $20,000 pickup or a $50,000 pickup. I will tell you, parts do not mate. So there's no parts that are multiplying in the parts department. So how does that happen? And you have to, a lot of times people are like, oh, it's appreciation. Well, no, appreciation needs to be accounted for, and it's not always the case. And if you've accounted for it, then what's causing the overage in another way? I had a situation where a counter person had access into the system to do plus and minus adjustments. They were getting a lot of the perfect example is you bill out for coolant, you'll bill out 2 jugs, you only use a jug and a half. So the technician, comes to the counter often and says, oh, I have a half a jug left over back at my bench, I only need 1. Well, they've billed out 2. That counter person just kind of kept a little tally on the side of how many extra jugs of coolant that they've had, and so they then went in, plus those in, and then plussed out something minused out something, took it off the shelf that they could sell on eBay, and they created themselves a nice little side business. And the parts manager's sitting there on the chopping head is on the chopping block when they come short, and and because the counter person thought they were accounting for it right, but of course they got out of control with it, and kept minusing out, more than they were able to, and it became a real problem. And so, there was that issue there, and again, that can go on for a long time. And I had another scenario where gentleman uh, was had some personal issues in his life, and started and had the ability to uh, sell some parts that they were ordering. They never received them into the pad, and so they would get ordered but not received in. They turn the invoice into accounting, and there's no one saying, "Oh, did these get received in or not?" So they're turning that invoice into accounting, and their thought was, "Well, I can make this back up. I just need this temporarily to get me through this hard time, and I'm not planning to steal it, but I just need it for now." So call that, I believe that's wrong either way, but their intention in their mind, they were so desperate that they could rationalize that it was okay because they're so devoted to the company. So in their own mind, they've rationalized it, and their intention was, "Oh, I'm going to get it back in there before anybody notices," and away it goes. Well, the reality is that that didn't happen, and several $100,000 later, because it went undetected for a couple of years, it reared itself, and really only reared itself because he actually finally admitted it, couldn't handle it anymore. And so it wasn't something they found. And when they uncovered it and they went back and did it all, it was crazy. So it's just there's so much vulnerability there, and that's where you run into that. So um, you know, it's not about being, wondering who might be stealing or doing something wrong, or whatever it is. It's just knowing, and that's kind of what I prefer, to know what I have there and know that I've got my bases covered. Um, so really the ways to fix it is going on to the next page, is you have to reconcile monthly at a minimum. You do. It's good business, and you don't want to kick the can down till next month. If it's over, a lot of times I hear, "Oh, it was over this month, it was short the next. We're not sure. We're just going to wait and see what happens next month." And the other thing is, I've heard from numerous parts managers that when I ask them, how did your reconciliation go, they say, "Well, I don't know. I turned my stuff in, but I never heard back." Communicate, people. Why are we going through all these motions and not doing something about it? You're a team. You got to work together. And if a parts manager is turning in their information, they need to have that feedback as to what happened with the reconciliation. It's important. So, and parts managers, you should be asking for it. Don't just kind of leave it up there and wait to see what happens. This is your you're responsible for this cash, so it's important. And the other thing is, using technology. It's hard a lot to keep track of all this stuff, and there's a lot of technology that you can use out there, and help you reconcile and grasp it, because it will save you a lot of time. So again, that's enough for me. And Ken, I'm going to turn it back over to you, and hopefully, if we have any other questions, we can answer.
Thanks, Mark.
We are running close to
we're-
the cutoff time. Sorry,
No
Ken.
problem.
I think we can go past 2 p.m. I know Alicia has to leave at 1, so if you need to step off, or anyone else, that's totally fine. But I want to give Ken time to do his slides. And if anyone has any questions, please feel free to ask them. All right, Ken, take it away.
Thanks again, Mark. We're big fans of Mark and his company. We've known each other for decades, so we'll just leave it at that. And worked together a very long time, and it's always been really great. And we think really highly of him and his processes, and his innovation that he's done in the parts has been amazing. It's really been great to watch that. Some things that we just want to kind of go over real quickly that take off on where Mark went today is he mentioned it earlier about the ordering process. If you have a big run on parts for recalls, whatever it is, and make sure that you're tweaking the parts back again, so you don't just keep ordering or get big investments into things. Um, Sometimes we have done some analysis on timing and year when parts kind of come and go and when to use the most. And, sometimes we can look at that or what weather impacts it's had in terms of parts ordering for certain times a year, like in Florida, you get hurricane seasons and yeah, or other conditions you might end up with in other states that have their own things with tornadoes or hailstorms and stuff like that. One thing also is the turn. We didn't get into a whole lot of that today. Is monitoring your turn. It all has to go with day supply. We always recommend you look at both types of turns. A unit turn that tells you if you have a lot of fast moving parts. Sometimes that can have an impact to show your whole entire parts department's moving quicker and your day supplies there, but you might have parts that don't turn as fast that need to be looked at as well. So we look at both unit turns and dollar turns, and that way can kind of get a better handle on volume of parts turns by cost the parts and by how long the parts stay into the in the parts department. Next slide. Other thing we see a lot of times when we take tours of parts departments is large investments in special order parts. We always recommend some type of really good control over this. Take deposits. I mean, these are all old school type things, but take deposits on parts unless they're maybe warranty parts and why don't you have warranty parts? And also take into account, let your customers know that you might have to have restocking fees if they don't come and get them, if you charge them for the parts ahead of time. Other thing to do is make appointments when you're ordering the parts. Make sure that when the part comes in a certain day, your customer comes on other days. Another thing Mark hit on too is you don't want your techs in your parts department for a lot of reasons. Sometimes they find that they just waste some time as well. They don't like to, but they start talking or the counter people are on the phone, they have to wait. So one thing we've recommended, and we've learned this from some of our larger clients, is have a delivery system. If you use a lot of appointments, get your customers trained on appointments, and when the parts need to be there, you can have the parts coming in certain days for appointments and have them delivered directly to the mechanic's bays. So that way the mechanic can stay in their bay except for breaks, and the parts will be there waiting for be put on the vehicles and to the right parts for the cars that are coming in, and you can keep track and in good condition on that process. Another thing we didn't hit on too much also today was on pay plans, and make sure pay plans hit all these metrics that Mark went over today, and then it comes out of when you're looking at parts, you have a lot of ins and outs, you have a lot of pluses and minuses, you have to have a lot of, if you're doing inventory, you have a lot of write-ins. So all these kind of metrics that kind of show some issues of constantly monitoring your parts department, tie that into your pay plans too. So it's kind of like just making sure the parts department's clean, it's organized, you know where things are, and you can get the delivery time reduced. All those kind of things can be incorporated in the pay plans as well. And also keep it clean. Just keep your parts department clean and organized. Next slide. Then I think we're about out of time. If there's any more questions. This is also something that can help communication with the accounting department, is review the parts summary reports, go over the reports that are there. There's all kinds of reports that are issued by the parts department, but have the accounting department familiar with them, and they can understand and read them a little bit, and maybe include your accounting department, your controller, or CFO in parts meetings on a regular basis, just so they can see where things are going. As Mark talked about, the counterpad reconciliations, that should be done. I liked his idea of doing it after your statement's issued. You can do those real times. The system that Mark uses is real time. It's right on point, and it tracks what's going on today at this moment. And those are kind of things that don't have to be done monthly and waste time with your accounting departments trying to get your dealer statements out and those kind of things. So that's all I had. We're right at 2 o'clock. I think there was one question I saw come through, but I didn't get to read it. So was there another question?
Yeah, it was a question for Alicia,
Oh,
for either of you.
of course, it's from
What,
Alicia.
of course, she's got a question about the effect of tariffs. Will the effect of tariffs have a long tail? And if so, how should a parts department / accounting department deal with it?
Give that to Mark.
So you said a long tail? What do you?
Well,
I guess maybe
I have to stay on a few extra minutes because given that tariffs that they're changing, right? I mean, you don't really know. So a part could come in next month, and is it going to be tariffed for this month? And I mean, and even after, and who knows if this is ever going to be resolved, right? I mean, given how much tariffs are changing, is even after we're not thinking about this all the time, is that still going to be an issue on parts coming in and going out of the of a department? I mean, maybe it's not even an issue, but I'm just kind of wondering.
So it depends on how drastic it is. I believe that probably, there's going to be some situations with manufacturers that are going to have to work something out with the dealers because it's going to be so up and down. Typically just, parts do go up and down because they switch suppliers, things like that.
Mhm.
And that's what the price tape is for. So as that adjusts, that's what it's going to be. Now, there's going to be some scenarios. If the manufacturer doesn't address any of it, then it's just going to be strictly that. It's going to be price changes and it's going to be appreciation, depreciation. And I will tell you this, if they're going up and going down, if you can figure out or predict what's going to go up, order those, get them in stock quickly, because then you're going to be and hold them until they go up, and then you're making money on them. But on the flip side, it can cut you that way. Right.
You parts arbitrage.
Right. So
Yeah.
But I think typically if that's if it's going to be that big of an effect, there's probably going to be some I don't know. It'll get confusing if they try to figure it out, because there's no the best way is probably they're just going to keep it to that. It's you're going to have the price change, and if you got one in stock and it went way up, lucky you. If you had one in stock and the price goes down, you're unfortunate. So it's going to be an interesting time, to say the least.
Yeah. All right. Thanks, guys. I think you have a few more questions. See you later. Bye.
Thank you, Alicia. Did I see a hand raised? Did someone want to ask a question? I can unmute you if you want to raise your hand again. Maybe it was a mistake. Okay, no worries. Oh, we got one. If all the check and balances are correct and you feel there is a DMS issue. Was that a question? Or was it if all the checks and balances are correct, but you feel that there's still a DMS issue?
So if you feel there's a DMS issue, that would be, first of all, what DMS issue do you think it is? Do you think there's a problem with the pad? Do you think there's a problem with how it's relieving? I mean, one way to do it is strictly take one day. If you think it's not relieving correctly, like it could be a DMS issue, meaning your mapping is off, like your source mapping, your part source to GL could be off. So the easiest thing to do is look at that. But if you really think it's a problem with the DMS, just take the what you think it is and watch that happen. So if you think that there's a problem where it's not hitting the proper GL or it's not relieving the GL the way it should, have a specific sale that happened and what it's supposed to do, and monitor that as it updates, whether that be a nightly update. Look at it the next day and tie out those transactions, how it went through to the GL. Did it do it properly?
That's the perfect answer, is test the system.
Yeah, test the system. And that's really where, I mean, with our parts rec program, you see it every day. So if something didn't go through right, it pops it out, you see it, you can deal with it. So it's just kind of it's a tough one though.
They
I like
said,
that.
have you
Oh,
seen
okay,
a
good.
DMS issue? Which, yes, and they're just saying because they're getting inconsistency. One day it's good, and then the next day it's not.
What was that question? I'm sorry.
I think it was just adding to the
He said, have you
to the
seen a
question.
DNS issue? And
Yep.
sometimes it's good, sometimes bad. What I would
Right.
recommend on that is Mark's information is here. And if you want to keep it out of the group more or less, is maybe give your specific issues to Mark and maybe he can answer it on the side or something like that. Because maybe
Yeah,
you might
but
have a pointing issue on a statement or a pointing issue. Sometimes you see those kind of things, but I'm not really sure what the exact issue is. But if you want, whoever asked the question, please just contact myself or Mark for sure. And with the exact issue, what you're having, because they might be able to figure out what that is.
Yeah, you can shoot me an email or give me a call on that's my cell number there. And if I don't answer, just leave me a message. I'll get it right back to you. But I'll be happy to usually I can answer questions pretty quickly. Not a big deal.
All right, awesome. I think we can wrap it up for today. Thank you all for your participation and asking your questions, and thank you, Mark and Ken. We hope to see you all at the next webinar. Thanks, and have a great rest of your day.
Thanks all.
Thank you all. Appreciate it. Bye.